Good to be here.
The first question we would like to probably ask to share with the investors what are the factors to consider for one to invest in Asia?
Okay, particularly at the moment, I think one should be looking at the valuations, because I think valuations have been off the radar for the last year. People have been seeking safety rather than value, but it's quite clear that as things are evolving, that are not as bad as people feared, valuations are starting to swing back onto the radar. So certainly Asian valuations would be my number one focus. I think also I'd still be looking and keeping an eye on the profits announcements. Some of the profits forecasts are much better than they were a year ago, but we still think that they're just a little bit, a tad on the aggressive side. So we've been looking at the results season certainly in March, and hopefully by June we're back in a position where we believe the forecasts and we've still got attractive valuations. So those would be the two factors that I'd be looking at the moment.
What are the concerns about hard landing in China? Sorry, there are concerns about hard landing in China. Is this a concern for investors?
Absolutely, absolutely. The question is, have those concerns been discounted? Because there's a lot of concerns about the residential property bubble, a lot of concerns about the local government investment vehicles. Leading out from those is the concern that non-performing loans could rise, and can the Chinese banks weather that, etc., etc. So lots and lots and lots of questions out there. But the big issue is, has it been discounted? And we think the answer is yes. And our global tactical asset allocation team in January actually got an overexposure, an exposure, and an overexposure to China for the first time in 2 years. So clearly, big sea change there. Having said that, getting an exposure because it's being discounted doesn't mean to say that the markets are going to take off. You know, at some point it will, but at the moment it's really a positioning on a 3-year view.
Are the concerns in Europe and the US going to hurt Asia?
I think clearly there's still the capacity to concern and hurt. But I think, again, a lot of that has been discounted, which is why the Asian markets have actually come back stronger than world markets in the first 6 months of this year. Now, I think in the US we've always been in the camp of sluggish growth, and that's what seems to be emerging there. So we never felt that there was going to be a torpedo there. A lot of the torpedoes coming out of Europe, I think, are actually not really going to affect Asia. They will, or they could affect sentiment, but the reality is Asian companies are well buffeted and protected, Asian economies are well buffeted and protected, Asian banks are well buffeted and protected. But if people suddenly get worried about Europe again, you could still see an Asian sell-off. Part of that is that Asian banks, European banks could still repatriate capital back to Europe, which is what happened late last year. So the reality is, short answer is, shouldn't hurt, but it could.
We have seen some Asian markets rally this year by an average of 15%. Will this trend continue?
As of today, which is late February, the tactical asset allocation team thinks that we could have another 15 to 20% before they start to peter out. It's basically a valuation game. The Asian markets last year discounted things that didn't look as though, or that they worried was going to concern. It doesn't look as though those fears are as bad as feared, and so they're clawing back some of the discounting that they did last year. Once that process is finished, then I think we could easily see the Asian markets go to sleep again, because of course we're still in the woods. We're not out of it yet. It's just that things aren't as bad as we thought they were going to be.
Final questions. What are the concerns investors should look out for this year, especially with the equity markets in Asia?
I think I've actually mentioned some of them, because we could still get torpedoes from Europe. So, for example, the American banks are highly exposed to the emerging or the Mediterranean countries that are under problems via derivatives. So there could be surprises there. But I think a lot of this has been discounted, and so I would be looking more towards the valuations, and I would be looking, I think, specifically at this point towards China, because I think that's the big remaining unknown. If there's a capacity to surprise on the net downside, it's China, but if there's a capacity to surprise on the upside, it's also China. So I think I'd be focusing on what's happening in China at this moment.
Thank you, Robert. That's all for me.
It's always a pleasure.